Hello everyone, welcome you all to MSCR class. We are doing unit 4, that is accounting for amalgamation. So continuation of the previous session, like we have done problems on mergers on consolidation. So in this session I am going to do merger through absorption. In the last session we have done merger through consolidation. So let's understand merger through absorption today. Here the problem will be given in terms of two companies data, financial data like balance sheet they'll give along with the adjustments. So based on that we are going to calculate first PC, that is purchase consideration. Then if there are any adjustment pertaining to debentures or any other general reserve or whatever, we take that, then we will go for preparation of the balance sheet. Okay. So we will move on to the problem, you will understand. East Limited and West Limited carrying on a similar business decide to amalgamate as on and from 1st April 2009. Their respective balance sheet were as follows. They have given balance sheet of East Limited and West Limited. Okay, share capital, reserves and surplus, P&L account, secured loans, unsecured loans, both are nil. Current liabilities they have mentioned. Then fixed assets, current assets and advances, loans and advances they have given. And both the side total of East Limited is 6,50,000, West Limited is 4,80,000 rupees. Along with the adjustment they have mentioned, that is in case of East Limited, which has been in existence for several years, the plant and machinery has been regularly depreciated. But in case of West Limited, which commenced its business only on 1st January 2008, the plant and machinery stood at cost and depreciation has been provided by means of depreciation provision. It is agreed that the combined company called East West Limited shall take over the assets and discharge the liabilities of each company on the basis of amounts in their respective balance sheet as shown above. The capital of East West Limited is 20 lakh divided into 1 lakh ordinary shares of 10 rupees each and 1 lakh 10% cumulative preference shares of 100 rupees each. East West Limited issued 80,000 shares for cash and agreed to allot to each shareholders in East Limited. Okay. So then, and West Limited even too, 4 ordinary and 6 preference shares of 10 rupees each fully paid in exchange for each 100 shares held by them and to discharge the balance in cash. Draw the balance sheet of East West Limited after the above transaction have been completed and show how each shareholders in East Limited and West Limited would receive shares and cash in the new company. Okay. So this is the data they have given in the problem. So based on the available balance sheet and the adjustment, we are going to compute PC first, then we compute the means of PC, finally preparation of balance sheet of both East and West. Here two company combine and carry the existing business, they will not form the new company. East and West together they will call East West, that is called merger through absorption. So we will move on to the solution. First let us calculate the PC, same thing for consolidation. PC calculation of purchase consideration. So we have to calculate for East Limited and West Limited separately, and the PC calculation, it is in terms of net asset method, because in the problem only they have mentioned asset liability taken over. It is PC in terms of net asset method. Yes. So take the net asset method like PC calculation. First you take the assets taken over, because it's absorption, both together they will combine the same business, A and B, East and West together, they will start the new business. So you take the all assets whatever they have mentioned in the problem. So, we have goodwill, freehold, land, plant and machinery, stock, debtors, then cash we have. So, take all the liability. First you take the assets. So, we have goodwill, then we have freehold land, then we have plant and machinery, then we have stock, debtors and cash. Stock, debtors and cash, these are the assets. So, take together, you add together. So, first is goodwill 1,60,000, it is 1,60,000. So, first you take separately, then we will find out the means of PC. Okay. First you take for East Limited and West Limited. East and West. So, goodwill East is 1 lakh and it is 60,000. Freehold land, it is 1,80,000 in East Limited and in West Limited it is nil. Next, plant and machinery, it is 2 lakh and 2,50,000. 2 lakh and 2,50,000. Stock is 80,000 and 1 lakh. 80,000 and 1 lakh. Next, we have a debtors. Debtors is 50,000 and 40,000. We have a cash. Cash is 40,000 and 30,000. Separately you take it. Yes, do the total of this. It is 6,50,000, they only mention in the problem, and 4,80,000 less. This is total asset. Next, less. Some of the external liabilities we have to minus. Some of the external liabilities we have to minus. Already I have told you while I was explaining the theory part of the PC calculation methods in under net asset value method. Okay. So, here liabilities they have given like some of the current liabilities we have to consider here, short term liabilities, creditors and provision for depreciation, both we have to consider. So, provision for depreciation we have 10,000 rupees only in West Limited, and creditors we have 10,000, 20,000 in both the company. So, take the creditors. Creditors is 20,000, 10,000 and 20,000. 10,000 and 20,000. Next, we have provision for depreciation. Provision for depreciation is 10,000 only in West Limited. Yes. So, you have to minus from the asset, same thing here also. 6,50,000 minus 10,000 and 4,80,000 minus 30,000. So, you will get 6,40,000 and you will get 4,50,000. Okay, this is called the value that is net worth. We can also call it as net worth. This is the calculation of PC. Kindly write down. Next, we will calculate the means of PC. Okay, we will calculate the means of PC. We are going to calculate. Okay. We are going to calculate the means of PC. You can take it here. Means of PC you can calculate. The means of PC means means of PC like payment, like in terms of equity, in terms of shares, how much we have to calculate. So, we have paid like if you take asset net asset method, it is 6,40,000 and 4,50,000. We will convert into PC, okay, means of PC payment, how much it is. Got it? Yes. So, here we have for both the company, one for West and the one for East and West. Yes. Yeah. Yes. So, in equity shades, how much? In equity shades, how much it is? Go to the adjustment, see the adjustment, see the adjustment. The adjustment says that, go to the last, the capital of East West Limited is 20 lakh divided into 1 lakh ordinary shares of 10 each and 1 lakh 10% cumulative preference shares of 10 each. East West Limited issued 80,000 shares for cash and agreed to allot to each shareholders in East and West Limited. Okay, 4 ordinary and 6 preference shares. 4 ordinary and 6 preference shares. So, 4 ordinary and 6 preference shares. So, share capital, equity share capital, how much we have in East Limited is 5 lakh divided by 100. If you do, we will get 5,000. So, 5,000 shares, okay, for East Limited is 5,000 shares into 4. 5,000 shares into 4. So, how much you will get? You will get 20,000. Isn't it? So, 20,000 into per share is at 10 rupee. So, 20,000 into 10 you will get 2 lakh rupees. The equity is 2 lakh rupees. Next, moving on to the West Limited, find out the number of shares. Like we have 3 lakh capital divided by 100, it is 3,000. Number of shares is 3,000 into 6. Okay, because 6 they only mention in the problem. It is it is 4 only. For equity is 4, for preference is 6. Confused. Okay. So, it is 4, 3,000 will get 12,000 into 10. 12,000 into 10. You will get 1,20,000. Next, moving on to preference share. In preference shares, how much? Okay. So 10% preference share here. First you calculate for East, that is East Limited. Then you can calculate for West Limited. They told us to take the same number of shares. Okay. So we have 5,000 into 6, then 3,000 into 6. We have to take it. So how much you will get here? It is 30,000 and 18,000. So into 10 into 10, they only mention in the problem. So 30 into 10, you will get 3 lakh here and you will get 1,80,000 here. Yes. So out of 6,40,000 and 4,50,000, I will take it here, 6,40,000 and 4,50,000. So this is in terms of share. This payment, it is in terms of share. Remaining balancing figures in terms of cash. So next, cash payment. Whatever you get the balancing figure, that is considered. So 6,40,000 minus 5 lakh. So you will get remaining amount, how much it is? 1,40,000. This is balancing figure. One lakh 40,000. So 4,50,000 minus 3 lakh. So remaining amount is 1,50,000. So this is the calculation of means of PC payment. Hope you understood. Okay. So next we will move on to the preparation of balance sheet. Hope you have written this. I will rub it. So next moving on to preparation of balance sheet. So both are merged into each other in absorption. So kindly prepare the balance sheet. So balance sheet of which company it is? Balance sheet of East West Limited. Okay, as on 31st 3, which year they have mentioned? Which year they have mentioned? That is 2009, I think. April it is. Take the balance sheet. Liabilities, amount, assets and amount. This is the problem they have given. Okay. So, we have to prepare the balance sheet for east-west together, east-west, that is in terms of absorption, merger through absorption it is. So, first you take all the assets together you can take it, that is goodwill. We have goodwill, we have freehold land, okay, then we have plant and machinery, we have debtors, okay, we have stock, we have cash. Okay. So, goodwill put together 1,60,000, it is 1,60,000. Then freehold land together we have to consider, okay. So, we do not have in West Limited, only we have in East Limited, that is 1,60,000. Then plant and machinery put together you have to take, how much we have, that is 2 lakh and 2,50,000 put together it is 4,50,000. Next, debtors amount, the amount of debtors put together we have to consider 80,000 and 1 lakh, that is 1,80,000. Next, stock, both the company stock you have to take, that is East Limited is debtors is put together I think it is 90,000, it is 90,000, this is 1,80,000 stock. So, cash we will come to know that after doing the working note. So, we will move on to the working note later on. So, take the liability side first, secondly you take the liability side here. Okay. So, take the equity share capital, equity share capital. So, total number of shares you need to find out, total number of shares you need to find out. So, how much we have before the merger and after the merger. Okay. So, how do you find out the total number of shares? Total number of shares. Yes, equity shares. So, see the adjustment they have given and we have found just before this we have done the means of peace, you know, how much we got? 20,000 shares. Okay, 20,000 shares we got it. Then we got 12,000 shares, east and west 12,000, plus they have allotted how much? 80,000 shares, 80,000 shares they have allotted. So, 20 plus 12 plus 80,000 all together we have to take how much? That is 1,12,000. 1,12,000 shares into how much they have specified? How much they have specified? Into 10 each. Into 10 each. So, 1,20,000 into 10. So, we will get 12 lakh rupees. Sorry, we will get, just a moment, 1,20,000 into 10. You will get 11,20,000. Fine. Next, moving on to preference share capital. So, total number of shares we need to calculate. So, total number of shares they have mentioned in the problem. So, see the adjustment. So, we got 48,000 shades, 48,000 shades into 10, we have to do it. 48,000 shades we will get into 10. It is 4,80,000. That is the preference share capital. Next, creditors put together provision for depreciation. Creditors 10 plus 20, it is 30, and provision for depreciation is 10,000. This is the total liability. This is total asset. So, how much? Calculate 4,80,000 plus 30,000 plus 10,000 plus 11,20,000. So, you will get 16,40,000. Okay. So, you will get 16,40,000. Cash, we need to find out the amount of cash here. The cash, how much we got it, we supposed to find out. So, first calculate the cash balance of East Limited, West Limited. You have to add these two. So, find out the here cash balance, working notes, cash balance of West Limited. How much we have? We have 40,000. East Limited 40,000 cash balance. Then we have to add cash balance of East and cash balance of West. It is 30,000. Okay. So, then you add these two, how much you will get? You will get 70,000. Then you need to add new issue. Okay. So, we have 80,000 of shades, 80,000 of shades, okay, into 10. So, how much you will get? You will get 8 lakh. So, add these two, how much you will get? You will get 8 lakh 70,000 rupees. 8,70,000 rupees, you will get it. After that, we have to minus with the cash payment of PC. Cash payment of PC. So, how much we have for east and for west? For east we have 1,40,000 and for west we have 1,50,000. We have done it in the PC calculation method, 1,40,000 and 1,50,000. So, the remaining amount is, we will get 8,70,000 minus 1,40,000 minus 1,50,000. So, we will get 5,80,000 rupees. 5,80,000 rupees. Okay, this is how we solve. So, the cash balance, this is the cash balance. So, cash balance is 5,80,000 rupees. So, this is how we solve the problem on absorption method. Hope you understood. Thank you.